His position is tax planning. It's not worth it to go deep into tax planning and trying to save on taxes, right? I disagree with it. I see where he's coming from, but I kind of want to highlight the best points of his argument and go from there. And I guess we could briefly introduce ourselves before we even go into it. So I guess, Ant, you
Oh,
could start and just tell them who you are and
gotcha.
what you do.
Hello, everyone. My name is Anthony Enriquez, based out of Sacramento, California. Been in the industry going on a decade now, specifically in the financial services space. And the main goal is just to help educate people through these platforms on simple finance things that you really aren't taught in school or anywhere else, from either our experience of our own ups and downs that we've had, or just helping hundreds of clients that we've already been able to help get them closer to their goals. So if you guys have
Hmm.
any questions tonight, please feel free to leave a comment or even reach out to us when you do see this.
Hmm.
I'm looking forward to the conversation tonight.
Same. And to briefly introduce myself, my name is Pascal. I've been in financial services for 8 years. Actually, was an accountant prior, so I know a decent amount when it comes to taxes and everything. Because that's what I majored in school before I decided to transition full time to financial services. And currently in Texas. So if we have any Texas links, let us know. And so I just want to get into it and go into the details of, is tax planning worth it? And I want to highlight the better points first. And the first point is focusing on making more money, right? And I think it's a very valid point because I know for you and you probably have something similar because we're obviously the same industry, helping people plan for the future and everything. There's people that they want advanced tax planning strategies, but they don't really make a lot of money, right?
Correct.
So there's people that we've talked to on calls where they make maybe 50 grand, which is nothing wrong. Start where you start. We're not making fun of it or anything like that.
For
But
sure.
the focus is just wrong, right? If your focus is on advanced tax planning, which some of these strategies are really expensive, right? They could be thousands of dollars and hundreds of thousands of dollars when you're investing your money into advanced tax planning strategies. It doesn't make sense to be thinking about how to save taxes when you're only making 40, 50 grand, right? So I
Yep.
think that's one of the points that Alex Mosey made in that video is it's really important to make money first before you even think about tax planning. I guess you could kind of add on that.
For sure. The effort that you're gonna go through trying to save, let's say, pennies on the actual dollars that you receive on an annual basis, in that instance of not making too much money, his point was to just clearly make more money as the objective. And then once it gets to a burden of taxes, then you can try to figure out ways to alleviate those risk of being taxed every year going forward. But if you're not paying too much in taxes, it might just be easier, like he said, just to not worry about going down the rabbit hole, because then you got to find people that are actually trustworthy and able to put structures in place to actually benefit from. So depending on where you're at, it may be easier to utilize your focus on maybe building another skill set or getting to the next position in your industry you're in. But definitely take an honest analyzation of where you're at, and maybe that might not be the smartest thing to do is focus on tax planning. It might just be to build your skill set. So
Yeah.
it does make a sense for the certain amount of people. But if you are making a nice coin, it definitely, you can be getting hit
Yeah.
over the head with some
It's
taxes. So
really
I
important. There is definitely a place for tax planning. I definitely think it's important. But a lot of people don't realize is when you're making 40, 50 grand, there's a lot of things you don't pay taxes on anyways because you get standard deduction. You get to just automatically off the bat take off 15,000 from your ordinary income just by running off your taxes, right? There's that. And another thing that people don't realize is when you actually liquidate your brokerage account, let's say you have a brokerage account, you're investing in the S&P 500, some sort of investment account. If you don't pay long-term capital gains, if your income is below a certain level, I believe it's around 40,000. It changes every year because obviously brackets change. But if you liquidate and you don't make past a certain point of money, you actually don't pay taxes anyways. So thinking about all these advanced tax planning strategies doesn't really matter because you're not going to be paying taxes anyways for the most part, or it's not going to be
yeah,
a lot percentage-wise in comparison to your income, right? Because as you make more, you pay a lot more, right? And that's just how it works. And just a matter of lasering on what's the most important thing. And that's kind of the issue. Sometimes people don't know where to prioritize when it comes into to their financial future, and they prioritize the wrong thing, and that ends up biting them back later on.
for sure.
And It's kind of funny. He mentioned how his friend traveled back and forth from Puerto Rico because Puerto Rico has that low tax thing, and some people want to take advantage of that. And he kept traveling going back, and I believe it was to Florida or something. He just kept traveling back and forth to avoid taxes. And I could agree that doesn't make any sense to put that much stress on yourself taking 100 flights a year to just save on taxes. And I guess,
For sure.
what do you think, Anthony?
No, definitely. If you're gonna do it, you might as well do it right and stay in one part for a long period of time instead of going back and forth. That is a short flight. Florida to Puerto Rico is maybe 2 hours, but if you're gonna do it, you might as well spend half of the year in one spot and then the other half in the other, or at least go quarterly just to
Yeah.
keep the flight miles down.
This is
That's a
that
lot of time.
I personally wouldn't do it. I would just try to find better ways to save on taxes, and I don't think that's it. And one of the things to his credit as well, to highlight some of the good points he made in the argument, is reinvesting back in your business gives you massive tax deductions.
Oh
And
yeah,
sometimes people get upset about Amazon, Uber, and some of these
big
multi-billion-dollar
corporations.
companies don't pay any taxes, but they don't pay any taxes because, technically speaking, some of them didn't even make a profit at some years. We invested so much money back into the business, they technically have in the profit and loss, they technically lost money. But
Yeah, and
it's reinvesting back into the business. They're putting cash back into the business. They're not paying themselves. They're just putting the money back into the business. And that's the ultimate way. If you think about a way to shield yourself from taxes, growing the net worth of your business is a really good way to shield yourself from taxes, because
hmm
you're not touching the money. You're just putting it back into the machine that's going to keep growing their assets and growing your money.
for sure. It's a way to legally make little to no money on paper. Obviously, Amazon and Uber and a lot of these places, you see them making income every day just because going on all around us. But on paper, they can literally deduct a lot of their reinvestment as well as the expenses that it takes to run these $1 million corporations every day with employees and just this natural business expenses. So it's something that you gotta definitely learn as you become a business on how to, you said, shield yourself from the big burden of taxes. So that's definitely one of
Yeah,
them.
operating costs. Yeah, exactly. And you get to just deduct a lot of those things that normally, if you're a W-2 employee, you don't get those advantages, right? And that's the advantage of being a business owner. And I kind of want to go into what he's wrong about, because I think he drastically misses the ball a lot with what he said on tax planning. And because there are simple things you could do to lower your tax bill, right? There are things like investing in real estate. There are massive tax benefits to investing in real estate. There are many business owners that position themselves in real estate to lower the tax bill. And if you position yourself in a way where you have high liquidity and you're making a good income for people that are high income earners, investing in real estate, that's probably one of the best ways to not lock up your money in traditional environments when you want to think about 401ks, IRAs, and other accounts like that, where you have to wait for a certain period of time. Taking advantage strategies about real estate in terms of using bonus depreciation, which they essentially extended and made it bigger in terms of what you could take advantage of bonus depreciation. It used to be 40%, now it's 100%. So let's say, for
Mhm.
example, you have a $1 million property and you want
Yep.
to accelerate the depreciation. You can basically write off 200,000 in a 5 year period with that real estate property you have. Right. And that's the cool thing with real estate. If you're making 200,000, you can write off 200,000 if you have a $1 million property, if you have a $1 million total nest egg, if you have real estate professional status, right? And
Yep.
that's not really that complicated. I don't think it's that complicated, and it's about working harder, not smarter, right? You don't want to work so much building your company and all these things, and then you end up paying most of your profits in taxes, right? It's good to do both, but it's definitely, you don't want to have to work yourself to the ground. I guess, what do you think, Anthony?
For sure. And real estate is one of those things. I know if they're making a lot of money, they buy private jets and stuff like that. And that's just another business to deduct. But then,
Oh, Anthony, we can't hear you. I think you're muted.
all right, can you hear me?
Okay, yeah, I can hear you now.
I was getting a call. I thought it was just going to keep me rolling over here. But oil and gas is another one to make sure that you're able to get those tax benefits, which is going to give you an increase on the money that you put into it, but then it also helps the economy, so they give you a tax deduction. So
Mhm.
there is multiple things that you can put money into. Also, people pay their kids as a way to lower their tax bill by putting their money into they say paying their kids, and they'll put it into
Roth account or something
a
like
Roth
that.
account or something to store it away for schooling or something like that for the kids. But there's plenty of options. The thing is, we just got to become more educated on ways to help benefit us because we make this money, and the last thing we want to do is give it away to somebody else. So if it's able to
And
benefit you at all, definitely do your research and make sure you don't just rely on one source. Do
mhm,
some research without the person that you first heard it from, and hopefully you can get another sense of how things work. So.
100%. And
Mhm.
honestly, there are some clients that we work with that personally invest in real estate themselves. They
Oh yeah.
save money in a high cash value life insurance policy, waiting for that opportunity, waiting for that deal where they're just basically saving money into their life insurance policy. And when they're ready for a deal, they just go ahead, borrow against the death benefit, still earn compound interest on the money, and go ahead and invest in the deal. And just keep
Yep.
rinsing and repeating. So they're earning interest tax free from their life insurance policy, and they're also going to be able to essentially write off a lot of their income with the real estate. And this just gives them the risk management and tax benefits that they need using life insurance and saving money in life insurance.
Yep. And one guy in particular comes to my mind. He actually used his life insurance. He was mid to late 20s buying his first property, and the bank was trying to see, well, obviously they got to do their due diligence and make sure that you have enough funds. And in the bank, he didn't have much money as far as liquid savings, but he was able to utilize his life insurance and show the value that he had. And the bank was that was sufficient enough for the bank to actually go ahead and give him a policy. And he ended up pulling out some money to help rehab the house. But it definitely one of those assets that it's
Mhm.
good enough for the bank to give you the go ahead on a loan.
Like collateralized loan and everything. We have a question. Is how does a solo 401k work? Just to briefly explain it, is it's essentially when you invest in a 401k, let's say you make 80,000 a year and you want to put, say for example, 10,000 in your 401k, you're getting a tax deduction upfront. So rather than paying taxes on 80,000, you're paying taxes on 70. But it's essentially tax deferred. It's not tax free. Sometimes people make that mistake. But later on, when you take out money from your 401k, you later have to pay income taxes on that. Not capital gains tax, not any other tax. You have to pay income taxes, which is the highest type of taxes you could pay, right? And in terms of tax planning and tax strategy, the 401k doesn't really give the best tax benefits. And I'll explain to you why. Because right now we're at historically low tax rates. And
Mhm.
with the government's debt at an all time high and everything, do you think tax rates are going to be lower in the future or higher in the future? Right. And that's the question you need to ask yourself. Right. And if you look at tax charts, there is a point where tax rates used to be 90%. Right. And especially if the growing conversation of things like socialism and all these things, it wouldn't be crazy if we have higher marginal tax rates later on, right? So it's not necessarily the best in terms of the tax efficiency perspective, but sometimes your company matches is a good thing to take. But just know that you're limiting your control when it comes to just investing in general. We talked about investing back into your business and how that could lower your taxes and everything. But at the same time, no, not everyone is trying to build a multi-million-dollar company, right? That's what Alex is doing. He's good at what he's doing. He's building multiple business. That's great. I'm not taking away from anything he's doing, but
Sure.
not everyone is trying to work all day and trying to maximize the amount of money they can make. So if you're trying to work smarter and not harder, it might make more sense to go about tax planning, right? And tax efficiencies because it's like you're a doctor, a lawyer, engineer, someone that makes a high income, like you're paying a lot of income taxes. So it doesn't make any like you could work more. So that you could do that. You could work more. I'm gonna work more and work more hours, but it's not efficient, right? A business
Yep.
owner making half as much, you can think about it like this: a business owner making $400,000 could make the same amount as a doctor making $1 million, like doesn't take home, right? So who do you think is working harder, really? When you think about it, or you think the doctor that's seeing a bunch of patients and just talking to like people and all that, and helping them with their like medical needs, or someone that just figuring out things about the tax code, hiring a CPA, hiring like advisor, and just planning properly. This is
Yeah, the more money that you do start making, Uncle Sam is digging into your pockets more and more as far as that number goes. You really want to be able to learn where to store your money because it's not about how much money you make, it's all about how much money you're able to keep. And like Pascal said, if you make $1 million, but you only could retain as far as bring home about a half a mil, it doesn't really make too much sense on making that number larger when you're only taking home pretty much half. So
yeah,
um, that's
yeah,
when it is crucial to start seeking out help, balancing the books, and finding other ways to lower that tax burden so then that you do. I mean, you're working hard no matter what. You might as well take home as much money as you can.
Exactly, exactly. There's kind of like sentiment of like, why don't we just tax the rich and just make sure we tax all these things? But you have to look at it from this perspective. The IRS only gives these benefits because it benefits them. That's the only
Yep.
reason to do it. The only reason the IRS gives any tax benefits is because it's benefiting them. If you actually look at it, right, the top 1% pays 40% of income taxes. You could actually fact check me if you want to on that. Majority of income tax is coming from the 1%. It's not the business owners, it's not the people that are doing, obviously, because of these people, they're not necessarily paying themselves a salary. It's the high income earners, like the engineers, the doctors, lawyers, maybe even some plumbers that make a lot of money. People in blue collar spaces make a lot of money.
Yep.
Those are the people that are really funding the tax system. Those high income earners that essentially earn salaries.
Yep. The high
Those
W
are,
two earners.
yeah, and it's very inefficient and you work a lot harder than you have to. And I think part of it is because people don't really know, right?
For
People
sure.
just do what they know, they do what they're comfortable with, and it's like, this is how you do it, but there's better ways to go about it.
Yeah, and you typically go to school or you go to like a learn a trade, and it's typically not going to be around finance. So you're so focused on being a doctor and going to school for all these years, studying hard, getting good grades, and then you get into your space and now you're accelerating and doing well in that. Nobody ever taught you about finance, so they don't want to take time away from their craft to learn finance for the most part. They just think, okay, I'm just going to go harder at my niche, earn more money, even though the government's really going to be taxing more. So you're
Yeah.
much giving up more leverage of your income. So that's why we say you have to do that part of either hiring somebody that you can trust that is going to be able to help you with protecting your finances, or you're going to have to just do the time and put some time into
Learning
the
yourself.
financial part of keeping money, because earning it's one thing, but keeping it's another.
Yeah,
So,
managing is a completely different skill set, right? So,
oh yeah, and it's one of those things that it's easier said than done. Let's say that,
hmm
because a lot of people can say that, oh, I'm gonna make all this money, I'm gonna save all this money for retirement or put it away for emergency fund. But when push comes to shove and somebody invites you on vacation, that's a lot easier to do than saying, "Hey, no, I got to put this money aside for taxes or for planning or
hmm
whatever that is." But the planning portion and the discipline portion, that goes hand in
Yeah.
hand, and something that we got to do better as society, I would say, because a lot of people are close to being check to check, if not already there.
Yep, even high income earners, right? It's
Hmm.
surprising. Like people I've talked to make 200,000 a year, and another thing is, it's like there's no way to avoid every single tax too as well.
For
So
sure.
sometimes when you see these news articles and everything, it can be a little bit misleading, right? Because more times than not, they're talking about income taxes, right?
Yep.
Income taxes is the highest you could pay, though. Like if you pay income taxes, the highest you could pay, right? So you want to try to pay alternative taxes rather than just working for money, right? And that the IRS kind of punishes you for that the more you make, right? But like businesses still pay payroll taxes, they still pay corporate taxes, they still have to pay those, right? Those there really isn't any avoiding those things, right? When they pay employees and they pay taxes still. So the idea of not paying any taxes for these businesses is not it's not really real. I think it's kind of more just things in the news that you might hear if you're to people our age and stuff.
That, and then you always gotta see the other side of the coin. Whoever's marketing to you, they might be using certain lingo or marketing a certain way to make it seem like it's gonna be the best things since cake and ice cream. But you got to know that what's their view of it. So just be mindful.
Yeah,
Uh-huh.
so positioning yourself in the best way to like pay as much taxes is the best you could do, but you're not going to avoid every single one. And just being okay with that and just understanding like, okay, there's some taxes that you just pay, like Social Security and Medicare tax, all that stuff, like the things that are just going to come out. The last thing I kind of want to talk about with you is kind of the buy, borrow, die method, right? You accumulate money in an asset, borrow money from your asset, right? And essentially you pass when you pass away, taking advantage of things like the stepped up basis and using like trust planning and stuff like that to pass down like assets tax free. Yeah, I kind of want to go into that. I guess what your perspective on that in terms of people going about doing that?
I first learned about the Burr method in real estate, building up that asset and then being able to leverage the equity that you built in that. Um, a lot of people do this by, let's say, buying a $500,000 house. They get some tenants in there. They start paying down the house for them, and then they liquidate 80% of whatever they have available, and then go buy some more real estate and just repeat the process of making sure that they retain one asset while someone's helping pay down that asset, and then pretty much duplicate it. And by doing so, you build up a nice portfolio. And like you said, you could either put your assets in a trust, pass it to the next generation, or buy like an insurance policy to make sure that when you do pass away, a large portion of whatever debts you do have
Skip
outstanding
it.
are paid for, as far as like the funeral expenses, as well as the actual outstanding debt of either assets or borrowed money that you have. That can be lowered as well, just to balance the books a little bit. But yeah, my first introduction was definitely real estate, and just put you down the rabbit hole of what else can be in that strategy of the Burr method, if you will.
Yeah. Honestly, if you ask me, like in terms of like just the average person taking advantage of something like that, I feel like life insurance is probably the easiest and simplest tool to do that with, the buy, borrow, die kind of concept. Because
Oh
if you
yeah.
think about it, right, let's say you max fund a cash value life insurance policy, right?
Hmm.
You have a death benefit, let's say it's 500,000 or whatever that death benefit is, right?
Yep.
You never withdraw money from it. You borrow against your death benefit. So when you borrow against your death benefit, it's tax free. So you could use that money tax free, it accumulates tax free, you could access it tax free, right?
Yep.
And you're using that money to fund things, whatever like purchases you need to make, help supplement retirement or whatever you're trying to use it for. And eventually, when you do pass away, there's a death benefit associated with it. And when it comes to life insurance, there's no income tax associated with it. So you get to pass away a tax-free death benefit to a beneficiary of your choice, right? So it's a very easy way to take advantage of the buy, borrow, die strategy is just max funding life insurance, right?
Yep.
And it helps you, pass down wealth in a very tax efficient way.
For sure. And to take that one step further, a lot of people will have the beneficiary of their policy be a trust that will then already have instructions to buy more life insurance on other people in the family. So then that the money pretty much spills over to the next generation in large amounts. Meaning the original person buys the insurance policy, the beneficiary is going to be the trust. So when they pass away, that money goes to the trust. The trust knows or has certain lingo in there to make sure that they're able to access the money through buying another life insurance policy. So then that whenever the next generation or the next people in line for that trust do pass away, the money recycles back into the trust and duplicates itself again, and pretty much just snowballs on itself. So there's definitely plans that you can put in place. You just got to know exactly what the tool is and really how to benefit from it.
And with
Hmm.
trust planning, you could literally make sure wealth never leaves your family, right? If everyone understands the goal of doing it, right?
Yep.
You could set up with trust like where it's just a constant cycle that keeps repeating itself over and over again to make sure that family tree always stays strong, right? Yeah, and that's kind of the great thing when it comes to just planning in general. When it comes to using trust and just planning for the future tax benefits. But
One
yeah,
sec before we get to the next one. You can easily pass on money to the next generation, but if they don't know how to utilize the tools that you put in place, it really was, I don't want to say pointless, but you're handing them a tool with no instructions, if you will.
mhm.
Um, Trust being one of those things that if you don't prep the next trustee or the person in line that's going to manage that trust for you, um, you're almost putting them at a disadvantage of not priming them to hold the reins, if you will, and making sure that they know how to utilize insurance, specifically the trust, to lower their tax burden. These are the things that and conversations that we got to have with family members, and not just. I mean, we all have family members that we love and we want them to be successful, but got to be a little bit more active on spreading skills or knowledge to the next generation, so then that they're not being dependent on the ones that put things in place for them. That makes
Because
sense.
yeah, because the money will go away very quick.
Oh
No
yeah.
matter how much money it is, like people know how to spend money. The money will go great.
That's
And
for sure.
so, any questions on kind of what we talked about, guys? Anything that you have in general in terms of just tax planning? Talked about a decent amount in terms of just not always focusing on making money is the best solution. Sometimes making more money isn't the smartest way of going about keeping more money, right? And
For
just
sure.
talking about that, we kind of talked about um, real estate can lower your tax bill and everything, and how you could use life insurance as a risk mitigation structure to compound your wealth over and over again. I guess, do you guys have any questions in terms of the things that we've discussed in the live? Any things that whether it's in terms of tax planning, like any questions you have in regards to that.
And then I know it is a little bit delayed for the most part. It might take him a little bit to put some questions in the chat.
Sure, we'll give him a second.
And if not, we will be back on tomorrow, same time, same place.
Yep. So we'll have a different topic. So we talk about different topics in regards to managing your money, saving your money, growing your money. If you want to learn any of those type of strategies in terms of just from a risk management perspective, because sometimes people just think about, hey, I need to just grow as much money as possible, and they don't think about any of the other risks when it comes to money. Like what happens when your car breaks down, whatever it is. It's great that you have a lot of money in your 401k, but like
What?
your family needs something now, like are you positioned to help them? Or if you need to start a business, like you're going to be able to do that, right? And it's more about sometimes more what's more important than just total returns is maximizing everything is just positioning yourself in the right way to take advantage of opportunities. And I can't really state that enough.
Yeah, because you never know when a good opportunity or crisis is going to occur. And being able to be flexible and adaptable for your lifestyle as it comes about, that's really going to be the most beneficial and bring you the most peace of mind at the end of the day. Because, like you said, it doesn't matter how much money you have in a portfolio if you can't access it, or if you do access it, it's going to really bite you in
Yeah,
the
it's
you
going to
know
hurt
what
you.
for long term planning as far as, hey, I just got a great deal on some real estate. I need to take out 50,000 or more than that. On certain plans, you can't access more than 50,000 at one given time. So,
And then you have to
just
pay it back in a year or two as well with their
uh,
401k. So
yeah,
now it's like you have to pay the loan back. And when it comes to investing in real estate, like there's maintenance, there's insurance, there's different types of like taxes, obviously, when it comes to owning a home.
mhm,
It's just not really positioned well to take care of a lot of those problems if most of your money is allocated to an account that you can't necessarily use
mhm.
at any point, right?
Yep, for sure.
Hmm.
And that I said before, that's basically our main focus of these calls is just to give our 2 cents and hopefully better you guys educationally on how to utilize the tools because there's plenty of stuff out there, but if you don't know how they really work or benefit you and stipulations that they do come with, um, doing yourself a disadvantage. So our main purpose of these lives is just to give our perspective and hopefully you guys can come with questions that can better detail how you guys want to plan for your future. So
Yeah.
appreciate you guys for coming today. Thanks for the questions.
Yeah.
We got
So I
anything on
guess
your end?
yeah, I mean, I guess to kind of end the call, I guess where can they find you, Anthony? What's the easiest way to find you?
It's going to be Ant Enriquez on all the platforms. My name is Anthony Enriquez. Like I said, I've been in the industry for nearly a decade now. And if you guys got any questions, you can reach out to me or Pascal, and we'll be more than happy to help out in any way that we can.
Yeah, my name is Pascal Manigat. That's my full name. Ownership is just like my business name and everything. And that basically, if you look on me, YouTube, Facebook, you use financial ownership. This is financial underscore ownership, but all the other platforms is just financial ownership. You can find me. And my YouTube content gives more in-depth detail forum stuff. So if you're trying to learn about planning in general and for your financial future, like YouTube content explains it relatively well when it comes to health insurance, life insurance, and retirement planning. So, yeah.
Here we go. Well, I appreciate you having me on. If there's no more questions, we'll be back at it tomorrow.
Yep. All right, guys.
All right. Have a good one.